Hello, internet friends. My name is Daniel Foch. I'm a real estate broker practicing in the Greater Toronto Area. Wanted to do a quick video today about RBC's forecasting, which has been covered a lot by the media. If you do a quick Google search under news for RBC economics report, you can see here on the right-hand side. The media has taken this and don't get me wrong. I mean, RBC has basically forecasted the worst housing correction that we have ever seen in Canadian history. I did a tweet about this because I find that the chart that they included there doesn't necessarily tell the whole story. And I'm going to go through why in this video. I've done a couple of smaller videos on it on TikTok. But I do think it's something that needs to be explored pretty exhaustively. I'm going to try and do analysis like this on a more regular basis, especially focused on national real estate in Canada and outside of the urban areas, especially. I think that there's, in order to avoid redundancy, I think that there's a lot of individuals who are covering the urban markets especially well on YouTube. And I'm a big fan of all of their work. So without further ado, I want to preface by showing you January 27th, 2022, RBC's reporting states that the fever breaks, Canada's housing market will cool but stay strong in 2022. This was released about 14 days before the market peaked. Like, absolute peak. It will go down as likely the historic peak in the Canadian real estate market for the foreseeable future, unless something massive changes, which I just don't see happening. So if we go through this one just really quickly, they do acknowledge sort of the reality of what's happening in the market, but they really are alluding to inventory scarcity being able to keep prices high in the Canadian market. And they also cite immigration as keeping demand in the excess demand territory. The next report in which they state that they believe in the strength of the Canadian market is in March of that year. So this is after the peak has already happened. Sales to new listing price or sales to new listings number ratio is already cliffing, and they state that we're still seeing incredibly strong price momentum. Fast forward to today, where they say we are downgrading our forecast for Canada's housing market, and they cite a couple of pretty damning charts that the media obviously has got a hold of, and I mean, you're seeing everybody talking about it, where we're seeing RBC basically stating that this will be the worst drawdown in Canadian history, and this chart is probably the one that I'll be focusing the most on here, alongside some other independent analysis that I've done on what exactly a correction will, or what exactly the historic corrections have looked like in Canadian real estate, so that you can kind of see them side by side and see also why this chart doesn't necessarily make sense. So when you look at this chart here, they show three different housing downturns. Those housing downturns are basically the early 1980s, the early 1990s, and then there's a small one, 2016, 2017, 2018, which was a little bit from interest rates rising, but also a little bit from policy introduction, two non-resident speculation taxes, one in BC and one in Ontario. But they also use this 100 index. So basically, your price peaks at level 100%, and then they do drawdowns from that. So it kind of doesn't really necessarily give you an exact idea of what they expect to happen in nominal or real prices. And in the same token, it also doesn't necessarily represent how bad those past drawdowns were. Like in here we're seeing 81 to 82 drawdown was about 10% in 1989 to 1994. It's showing about 7% drawdown. We know that these were much more severe than that. So if this is the loose metric that they're using to show that that prices could be worse than those two scenarios, I think it's worth looking at how bad prices actually came down. And there's a tool that I much prefer for this. So if you just go to Google and you just search The Economist Global House Prices and pull this chart up here, it's a pretty sweet tool. It does make you compare two markets side by side, which I guess is fine, but it's kind of messy. You kind of really need it to be full screen, which I'll do for you right now. I'm just going to blow this up here and make it full screen. So if you look at Canada in let's use that first correction that they have there. House prices peaked in Q1 of 1981, and it took them until, it looks like, Q1 of 1985 to reach their bottom. So again, if we go back to that forecasting from RBC, where their chart uses this, again, arbitrary time frame of T plus 1 plus 2 plus 3. I'm assuming that sort of T plus, and maybe each plus 1 is a new year being added. So if you're 3 years, let's say, peak to trough, which is relatively accurate for this correction, it gets a little bit more confusing for the next correction. So let's fast forward to, and I also think it's worth noting here that if you look at this horizontal line, you can see when it took prices to actually recover to that price, and in Canada it was actually Q1 and Q2 of 1987 where it took to get back to that 100 on the index. And then shortly thereafter, prices skyrocketed again, and we're in Q1 and Q1 and Q4 of 1984 or 1989, where house prices actually double peaked. They blew off in the summer quickly, and then they came in for a nice bull trap at the end of the year there. Now you can see that it doesn't necessarily look as severe, the downturn here, but it actually took on the nationalized basis, on real prices, it looks like until 1998 to sort of actually reach a bottom. It did kind of trade sideways for a while there. And there is another bottom here in 1993. And again, you're looking at 10% drawdowns on the national. So not as severe as what we saw in the 80s, but again, in this one especially, it is worth noting, again, that horizontal line where you can see how long it took. It took until Q1 or Q2 of 2002. It took until 2002 or 2003 to get back to that price in the Canadian market. So 12 years of correction. And I think this one's important to note because when you go back to that RBC report, you can see here that we saw that in the 90s, that very slow recovery, and it looks like they're forecasting almost an identical kind of phenomena of a severe drop. So we almost have a blend of what happened in 81 and in the early 80s and the early 90s here, where we have a severe drop. This is what RBC is forecasting, and then basically trading sideways and a very slow recovery. And if my math is correct, basically on the T plus variables, they're expecting that we're going to hit a trough in 3 years, and it's going to take, it doesn't even look like we're seeing much recovery. It's going to take another 2 years to even start to see prices increase. So that's sort of my summary on what the economic guidance from RBC looks like if you actually take it down and really compare it to, because again, they use a very loose chart, and you'll see a lot of reporting agencies tend to do this because it allows them to be right by using very vague metrics. So take it with a grain of salt, as we should have probably with their original reporting in January, February, etc. And most more informed and sophisticated consumers in the market know this, but I do think that there's a bit of a degree of moral hazard when it comes to reporting and flip-flopping on your predictions as an agency that's a trusted body in the Canadian real estate market. So be careful out there.